Making money is one thing, but actually keeping it and making it grow, that's a whole different ballgame. Today, we're going to dive into a really powerful idea, how a simple $50 investment, repeated over time, could actually give you a piece of the biggest, most innovative tech companies on the entire planet. This isn't just about stashing cash away. It's about owning a real slice of the future.
So, here's the game plan for today. We've got 5 simple parts. First, we'll tackle the silent money eater that is inflation. Then, we're going to put the tech-heavy NASDAQ head-to-head with a classic, safe asset. After that, we'll peek under the hood at the giants powering all this growth. I'll show you the super simple $50 method, and then we'll walk through exactly how you can take your very first step.
All right, first things first. Let's talk about a problem that hits every single one of us, especially if you have a savings account. It's this slow, quiet, but constant erosion of your money's value.
I mean, you felt this, right? You look at your bank account, the number is the same, but when you go to the grocery store or fill up your car, that money just doesn't stretch as far as it used to. There's this invisible force at work.
And that force has a name, inflation. It's like a silent thief that's constantly dipping into your bank account. Even when the economy is doing great, the cash you're holding is slowly losing its actual buying power. So just saving your money isn't enough anymore. You're actually falling behind. You need a strategy that can outrun this thing.
So how in the world do you fight back against that? Well, let's look at the actual data. We're going to put a traditional safe haven investment up against the engine of modern growth, the tech market. It's a showdown.
Okay, just look at this. The difference here is staggering. Over the last decade, gold, that classic safe investment, gave a pretty respectable 52% return. Not bad. But the NASDAQ, which is basically the top 100 tech-focused companies, delivered a whopping 372%. We're not just talking about winning here. We're talking about running in a completely different race.
And this is so important to get. This is not about get-rich-quick schemes. Investing in technology, especially, requires a long-term view. These companies are building things that literally take years to develop and mature. So it's not about trying to perfectly time the market, it's about time in the market.
So what was fueling that incredible 372% return? Where did that actually come from? Let's pop the hood and take a look at the actual titans of tech that are driving these insane numbers. Let's start with Apple. I mean, a decade ago, they were already a massive company, right? This wasn't some risky little startup. And yet, even then, investing in them would have grown your money by over 900%.
Okay, now let's look at a true disruptor. 10 years ago, electric cars were still kind of this niche idea. But for anyone who believed in Tesla's vision back then, well, the return has been absolutely extraordinary, over 2,600%.
And then you get to this. This just perfectly shows the explosive potential inside the tech world. NVIDIA, the company whose chips are powering the entire AI revolution, has produced a mind-bending return of over 12,000% in just a decade. That is the kind of growth that can fundamentally change your financial future. I know, seeing numbers like 12,000% can feel a little intimidating. It's easy to think, man, I missed the boat on that one. But the whole point of this strategy is that you don't need a huge pile of cash to get started. Let's break down how you can make this stuff accessible.
The secret here is a super simple but really powerful concept called dollar cost averaging. You can think of it like filling up a lake, but just one drop at a time. By investing the same amount of money, let's say our $50, every single month, you automatically buy more shares when the price is low, and you buy fewer shares when the price is high. It just smooths out all the bumps and totally removes the stress of trying to perfectly time the market.
So let's actually run the numbers on this. If you had put just $50 a month away for the last 10 years, your total investment would have been about $6,000. In the NASDAQ index fund, that would have grown to over 15 grand. Not bad. With Apple, it's over $27,000. And with NVIDIA, that same $6,000 would have turned into nearly $180,000. That's what happens when consistency meets innovation.
Okay, so the theory's powerful, the numbers are incredible, but how do you actually do it? Let's get practical and walk through the final steps to make your very first investment.
The one thing that unlocks all of this for pretty much everybody is something called fractional shares. You might see a stock trading for hundreds or even thousands of dollars and think, well, I can't afford that with just 50 bucks. But here's the thing. You don't have to buy a whole share. You can just buy $50 worth of that share. It gives you a piece of the action no matter what the price tag is.
And look, getting started on a modern platform is designed to be ridiculously simple. It's really just 3 steps. First, you fund your account. You can use a card, a bank transfer, whatever. Next, you move those funds over to your trading balance. And finally, you just pick a company you believe in and buy your $50 fractional share. Boom, that's it. You're an investor.
So why focus on the US tech market? Well, there are some pretty solid reasons. It's the most dynamic and investor-friendly market in the world, so it attracts the absolute best tech talent from everywhere. It's all supported by the US dollar, which is the world's reserve currency. And, on top of that, the big tech leaders, they often build such strong market positions that they basically become monopolies, which leads to huge profits and continued growth.
So maybe the best way to reframe this whole thing in your mind is to think of it like a subscription. But instead of paying for Netflix or Spotify every month, you're paying for a subscription to your own future wealth. It's not a gamble, it's a consistent, proactive choice you make for yourself.
And that really brings us to the final question. With this knowledge, and with a simple strategy that makes it accessible to everyone, you're no longer just a spectator watching from the sidelines. You actually have the ability to own a piece of the very companies that are building our tomorrow. The only question left is, what piece of that future will you own?